Hello and welcome to the Practice Marketing Podcast, highlighting successful strategies from North America's fastest growing clinics and experts so you can learn from their wins and power your practice growth. Hi, I'm your host, Neil Triggett, CEO of Practice Promotions, and today we're going to be talking about simple tax and accounting moves that you can do to save you thousands with our very special guest here, David Light, who's a physical therapist. He's the co-founder of Healthcare Accounting Solutions. And David actually helps physical therapy practice owners get their numbers organized, that financial side, reduce tax stress, stop overpaying Uncle Sam, so that they can move more forward and obviously earn better. And in this episode, we're going to be breaking down some simple tax and accounting moves that can save you as a practice owner thousands. And so you don't necessarily have to be a financial expert, but we're going to talk with David, who is and works with practices all the time. So David, welcome to the podcast.
Yeah, thanks, Neil. Happy to be here.
Yeah, great. And so what's really special about David is we go way back because David actually bought my physical therapy practice back in Boynton Beach. So It's very special here. I'm really glad to have him on with us here today. And so David, tell us a little bit about your story. So you're a physical therapist. You had a successful practice, regional physical therapy, I believe, right? In West Palm and multiple location. You acquired us, and then tell us a little about your story, kind of how you got into the financial side of it and helping practices with that.
Yeah, sure. Happy to be here. And it also demonstrates for anybody that doesn't know this already, how small of a world physical therapy is. You know, when you're sticking around for a while, you see how small that world gets real quick. My background's really unique and it's interesting. And I never in a million years would have been able to say, like, I want to do this professionally over the course of my time. So I got into PT back in the late 90s. My wife and I both went to St. Augustine. We were one of the first few classes to come out of there, and started, really hitting the road running as a PT, pretty hard, back then. And so I did 2 stints with corporations. One was a publicly traded company, with, $4 to $5 billion a year. So I got that, experience from a large, big machine, type operating system. And then I went to a private equity backed company and started doing a lot more business development and starting up clinics and hiring people, and got the opportunity to really get to a higher level regional manager job and do a lot of work in that, business development, hiring, building out, growth phase. And then I thought, I've done really well with both these jobs. I'll just go into private practice and, do this for myself. And learned very, very quickly, which Neil had already learned, and everybody that steps into private practice from the corporate world, it's not near that easy. It's definitely doable, but it's not near that easy when you don't have that support structure around you. But I figured it all out. That was in 2007, made it work pretty well. By 2011 is when our paths crossed. And we were in a position to do some other acquisitions, and acquired Neil's practice then, and allowed him to kind of make that next phase and go to Practice Promotions, which was awesome. And then about 5 years after that, in 2017, we actually exited. So we did original was in 2007. We did some acquisitions through time in 2011, and then we exited private practice in 2017. And that's really where my career sort of took a turn, kind of like yours did, Neil, out of private practice, out of the clinical side of things. I actually got hired by an accounting firm, which was a really, really weird match. I just knew a lot of guys that worked there, and I started doing some small consulting kind of locally and bringing them some business. So I got hired as the director of business development for a regional accounting firm, a really good outfit, and ended up working, kind of starting over, cutting my teeth on the financial services side. So completely non-clinical. I had a massive no-compete. I went to the other side of the table from a finance perspective. I'd gotten an MBA along the way, and started a small to mid-market ambulatory consulting line, and then also doing a lot of business development. And that experience, especially alongside of a really good friend of mine, Kevin Reynolds, who's been a healthcare CPA for a long time, really spawned this idea of, let's do this on our own. We didn't think that then because he was an equity partner in a really good firm, but that firm ended up selling. So back in 2023, and we're like, you know what, we should just do this on our own. We've been doing it together for 6-7 years. We know what we want to do. We know who we want to help. Who we want to help is who this podcast is designed for, which is, small to mid-size private practice owners in physical, occupational, and speech therapy. We do some other work too, but it really led me to found this company and say,
Hmm.
okay, how can we make a difference? Because so many, well, first off, everybody has to do taxes, but so many people are a little bit intimidated. They're all clinically trained like we were. They really don't have any idea what is needed and best practices are. So we're like, that's the people we want to help, and kind of where we want to make our legacy over the next 10 to 15 years.
Awesome. Such a fascinating
Yeah,
story. And
yeah, it's
I
been
love your
fun.
journey there. And I think you bring something very unique to accounting, right? And financial management. And that is that background as being a practice owner, knowing the, let's face it, in our industry, there are lots of nuances, right? It's not just some cut and dry. There's a lot of nuances to obviously how we get paid, insurance, and dealing with cash flow and all these other parameters, right?
Yeah.
So having that know-how in the clinic is critical. Just like for us from the marketing side, just having the know-how in the clinic, it just makes a huge difference in being able to deliver what practice owners are looking for. And you mentioned something very interesting there, which is as practice owners, we sometimes just kind of bottle accounting to be all about taxes,
Right.
which is not, right? And I
Correct.
think one
Yeah,
thing you
correct.
learn as you grow your practice, as you grow a business, is that the financial component becomes more complex, and the whole efficiency of getting money in the door, utilizing money within the business, and making sure that you're profitable so that you can, build the business that you're supposed to build and have freedom financially. It becomes more and more and more critical. And so I'm just kind of curious from your side, as you work with different practices as they scale and grow, like what are some of the big areas there for like on the accounting side support that's needed, not just from a tax time?
Yeah, so we basically look at it at three different levels, right? There's the basic fundamental level is the bookkeeping level, right? Number one. Then there's the month end and quarterly, let's call it financial and tax strategy. And then at the end of the year, there's the actual tax returns and review of corporations and how they're structured and ownership changes and stuff like that. So, we always kind of work in that structural fashion of what's the base. And our advice to the large majority of clients is do your books yourself, right? I mean, if you get to a certain point where you really have to outsource that, you can, and there's many companies out there that can help do that piece for you. But if you disconnect yourself as an owner from that fundamental piece of understanding who's getting paid what from a check perspective and monitoring your deposits, that seems to be the first piece of a rift. That's the first step of a rift of not understanding what's going on financially and operationally with your practice. So we like to see the owner involved, the owners involved at that level. Now, that doesn't mean they have to do everything and understand everything and analyze everything. Where we typically come in is that month end process. So from an internal control perspective, it's good too, because if you're delegating that, but you're still involved, which is fine. As practice owners, you got a million things to do and patients to see and all this other stuff. We usually come in at the month end component. So make sure all the accounts are reconciled, answer any questions that need to be answered, review and put together a financial packet for you so you can see and your company starts to run not like a mom and pop private practice. It runs like a company should, with real-time accurate financials for that month before, due by the 15th of the next month. That's the corporate way. Then you start changing the dynamic of how that looks. So it's really kind of those three things. But you're right. It's what it shouldn't be and what it's not is, hey, the year's over, 2025 is over. Let's get our business tax return done and let's think about it now. It's like, nope. And I just had a call this morning with one of our clients, and we literally spent an hour just reviewing her income statement and looking at it from a month by month standpoint. And if things looked out of whack, we would jump in there and hyperlink in there, and we had to reclassify some things. So I mean, it's that granular level effort that really then, if it's done the right way, it's kind of like patients with a home exercise program. You do the effort, you put it to them, they do the job, then the short-term and long-term goals kind of fall in line, and they're not as hard or they're not as off track at that. So
Awesome. Yeah, I totally agree. Like I recall, right, starting out in practice, and even as we got, multiple providers in there, managing those books, right, is something that I didn't know, right? I wanted to delegate that. We had somebody internal that helped us with the bookkeeping, right?
Yeah.
But I think it's one of those things that you have to realize too, like finance has its own language.
Yeah.
And so I'd have
Yeah.
all these misunderstood words all the time because I didn't understand the language of finance. It's like when you start going to college and you start learning the medical language for PT school, like it takes a long time
Right.
to get that medical language knowledge. The same thing with like finance, it takes a lot of repetition. Like you said, getting in the books, working off of the books, learning from your CPAs, right? The language of finance and what's going on there. But I would agree that sometimes, we just do the books, right? We just organize things, but we don't necessarily leverage the analysis part of it on
Right.
a monthly basis to
Right.
make sound decisions of where we need to go in the next month, the next quarter, whatever it may be
Yeah.
there.
Yeah. Absolutely. Absolutely. It's not a monkey see, monkey do. I mean, there can be some mechanical things that take place, but if you don't, as the owner, if you don't really understand what they are, that's a disservice.
Mm-hmm. Yeah, totally. And so as you've worked with different practices, what are, say, 2 or 3 business expenses that practice owners may often miss or don't track that well that cost them money?
I think the first one is that it's not a classification in and of itself. It's really understanding that you're not looking maybe for $5 in savings, because typically those things just aren't there, right? I mean, it's Uncle Sam, so it's trimmed down enough that there's rules and regulations that you have to follow. So if we're not looking for that golden egg of tax savings, what we should be looking for is, how does 1 plus 1 plus 1 plus 1 plus 1 equal 5, right? So the number one thing that I see missed the most is not paying attention to all the littler or smaller items that add up in aggregate to a much larger deduction. Add up in aggregate to a much larger expense, maybe line items. And that's a couple $100, or that's a couple $100, well, that's a couple, well, then that's 1,000. Okay.
Mm-hmm.
And then that 1,000, if you do that throughout the year and you've got a fairly sizable practice, that adds up really, really quick. So that's the number one answer. I think number two, where there are larger changes that can be made from a mitigating a tax liability standpoint, is the use of retirement accounts. So one way or the other, you're going to pay taxes on income. However, if you play the game where you can defer that, and as a successful private practice owner, maybe your income now is up here, but realistically down the road, once you retire, your income's going to be down here, then your tax is going to be less on that income if you've deferred it down the road. And private practice, it gets a little wonky, because one of the things that's really difficult when you're setting up, and I'm not a retirement account expert by any means, but when you're setting some of these things up, there are rules and regulations you have to follow. And there are also, some of them are front end loaded with expenses. So it turns a lot of people off, and they, but it shouldn't. You just need to look at that in every individual aspect and say, okay, what works the best for me, and how can I decrease my AGI now in order to push some of that income and defer it down the road later. And that can make a huge difference from a private practice owner perspective.
Yeah, I mean, there's many different kinds of strategies there, right? Where you're able to, it's all about making the money, right? But then on the books, being able to show it as expenses or depreciation or whatever you can work there to obviously lower taxes and offset tax expenses there.
Yeah.
Do you ever see, for like practice owners that own their own buildings, like cost segregation studies and things like that they use to try work on like advanced depreciation?
Oh yeah, totally. That's a big one too. 100%. Yeah. That would have been my third. Like the first is the aggregation of a lot of smaller expenses that get overlooked. The second is retirement. The third is strongly consider owning your own building and taking advantage of some of the tax savings that can be involved in that. For a lot of people, that's just a little out of their comfort zone, because it's a huge obligation, but you got to think about it and a lot of people, are starting out and they're not in that position. But if you think about it, you're going to pay rent regardless. None of us in private practice have ever been rent free, right? So you might as well pay that to yourself and just leverage that a little bit more. But that's a big one as well.
The top 10% of PT owners aren't just surviving, they're thriving. But what's their secret? Well, Neil Trickett's new Market to Grow book reveals how the top 10% of PT practices leverage marketing systems to simultaneously grow their new patients, attract top talent, and boost profit in their practice. You can learn from their secrets. Visit practicepromotions.net/book to claim your free copy of Market to Grow. Yes, you heard that right. We are shipping a free copy of Market to Grow to all podcast listeners who want it. Just visit practicepromotions.net/book to claim your free book. And now back to the show.
Yeah, I think I see that more in, once you're an established practice, you have repeat business, you've been going for, a number of years, you might are considering that next location or the next 2, 3, 4 locations. Like that's when that becomes more, kind of serious and opportunity wise to bring into the business. It's almost like running a separate business though, right? Like
totally
the rental part, like the operations or the asset management of the building, and then you kind of rent it back to yourself.
Right.
As a business,
it's a separate corporation. It's more work, but it's definitely, especially with the way real estate prices have, increased over years. But it's a really good move to make if you can.
Awesome. Yeah, totally. So, is there any kind of tax moves that you see that you kind of help prepare practice owners for that you see them not really doing, or they make mistakes there that opportunities for them throughout the year to improve on their tax liabilities?
The biggest thing that we see, and this is consistent, and a lot of people that listen to this have experienced this at one time or the other. The biggest thing that we see, Neil, is the fact that practice owners get so busy, and I get this. I mean, I was one for 10 years, right, in private practice. So they get so busy with the day-to-day operations that, let's say a quarterly meeting on the calendar comes up that you're supposed to have with your accountant, and you need to look at that, and you need to look at your tax strategy, and you need to look at your quarterly payment, and you need to look at the projected and forecasted next 3 quarterly payments. And they go, oh no, I got a marketing lunch, or oh no, my clinician called in sick and I've got to do this eval. Oh no, and they push that off. And that's really where you start this divide of what needs to be done in real time and then what needs to be done at the end of the year. And if you do it, it's like eating an elephant in small pieces, right? I mean, it's a hell of a lot easier to go quarter and understand where you are and make a payment, and then understand and have an idea of what the next 3 quarters are going to look like. And you get through that year, you're on track at the end of the year, from a return perspective, because you've just went through it in real time and you've done it in 4 segments. The biggest thing I see people do, and that avoids, where I was going with that, is that avoids the owner, worst case scenario is by March 15th, getting a business to return draft that says, hey, by the way, you owe $37,000. Even worse is it gets extended, and then you're into the fall, and it's like, hey, you owe $37,000, and we've got to file this in 2 days. And you're like, what the flip? And we hear this all the time, right?
Wow.
My accountant didn't talk to me. Sometimes that's 50-50 because you were too busy, but my accountant didn't talk to me. This is for last year. I got an extension, and now it's due, and I owe $37,000, and I don't have it. And I don't know what to do. And they're very, very upset, very emotional. It's a big bill and it's due. It's not like you're getting out of this thing. So that's the biggest disconnect we see. And so there needs to be, whether it's with us or whoever, it's fine. I mean, we're well aware we're not going to do everybody's work across the country, and there's a lot of really good relationships there, but, make sure that you communicate with your CPA firm or your CPA specifically, at the very least on a quarterly basis in real time for the year that you're in, to avoid that awful situation of next year looking back. Because by like October, when you've got 3 days to try and figure out where your taxes for the last year went, and you're 10 months out of that, you're 2 months from ending the next year, is a really difficult position to be in. You don't remember what you spent money on and what you did and didn't do. So it's awful. And we get calls, especially in the fall, of very, very upset people that have been through that process, and it's disheartening, and we try and help as much as we can, but it's like these things can be avoided. It just takes time, effort, proactivity and communication.
Yeah. It's a discipline thing too. I mean,
Yeah.
same thing for us. Like we've seen practice owners working with us for marketing, and then all of a sudden they're like, oh, I have to pull back on my marketing
Yeah.
because I got this big tax bill that I wasn't expecting. And well, we pull back on your marketing, expect your business to dip.
Right.
Now it's like a vicious cycle.
Yeah.
Right? So I 100% agree there. I think sometimes we start off with the mindset of, oh, I will use my accountant in March to prepare for my business and my, personal taxes, right? And like that's the wrong time to work with your accountant because you should have worked with them the year before.
Right. Plus,
they're
they're
like that
slammed.
much retro. You got to work at it during the year.
Plus, that time of year is not a comfortable. Hey, let's just do a talk and catch. No, we've got X number of clients that are all in the same position that have the same deadline. So it's really difficult, but the downtimes, that we really like to use to invest in relationships with our clients, through the summer, a lot of firms really get quiet. We do a lot, we're doing, we're usually on a really good cadence with everybody, but we take that downtime and reinvest it to catch up and, and not fall too far behind so that limits the work we've got to do in the spring.
Yeah. I think too, like, as a practice owner, as a business owner, as you start to grow to a certain size, right? Maybe you're sort of $500,000 to $1 million. You're starting to go beyond that. Your relationship becomes different with your accountant, right? And so it's not necessarily just a tax preparer for you. It's more someone who can you leverage to help you with analysis, right? Financial analysis and tax prep work, right, during the year.
Yeah.
And I think what you're saying there is at least on a quarterly basis, sometimes you have to like reevaluate relationships too, because your accountant that you were working with may not fit where you're trying to go.
Right.
Right. So, and I love what you guys do because I think it goes beyond just like, a CPA tax preparer, right? It's the much more financial analysis and really digging in with the practice owner because you're looking at it also from a practice owner's perspective in that, okay, what are the things I need to pay attention to this month or this quarter that's going to help me, move the needle in my business, avoid mistakes that I could have made. And then also, what am I doing right now to prepare this year to take advantage of different tax, savings solutions that are out there.
Yep. And that's a really good point, which is what we are and what we aren't. So as a more traditional firm, which we are, we're more of a boutique firm, right? We've got a narrow lane of outpatient ambulatory services. So PT, OT, speech, behavioral health. We do a lot of work in the wellness space, but it really needs to be, where clients and patients are coming in for services and leaving. We don't do anything with hospitals or anything like that. We do some crisis stabilization units under the behavioral health that have overnight stays, but that's very, very isolated. So we start really at that monthly standpoint. So there's analysis, there's guidance, there's strategy, there's higher level. What we aren't, and we're very clear about this when people inquire about our services, what we aren't are coaches, right? There's lots of people that are doing coaches. It seems like it's relatively a new thing, over the last decade or so, I guess if we can say that now because we're old, but this coaching aspect, and I know some of them, and that's fine. And they get into much more of the granular, what's the proper way to hire a front desk and what are some operational metrics, from a cancellation rate or an arrival rate and all that other stuff. We really don't do that because we're more agnostic to the company, meaning like, okay, you fall in an outpatient ambulatory facility, whether you're a pain medicine doctor, an infectious disease doctor, an orthopedic group, a pediatrician, or a physical therapist or occupational speech therapist, we kind of treat you the same way. It's like, okay, that's your business, and what you do from a service delivery is totally up to you. Like we're not involved in that per se, but from a financial perspective, that's really where our wheelhouse is. So we can, and the nice thing that we can do is marry that to an operational model, having been a PT for 25 years and in all these different settings and worked in healthcare too. So it's very, very unique, and it's shied away from a pure CPA perspective because all they're going to do is numbers, and they're really very reactive on the practice owner. We're going to be much more proactive and aggressive in a way that we want to get answers out of you over the year, to kind of stay on track. So it's much more beneficial.
Absolutely. I love that. And I think too, like as you grow, as your revenue grows, the tax game becomes even more vital.
Oh, it's huge.
Because what is it, like 100,000 page tax code or something like that? Something insane. Which you can't possibly know everything about it, but you work with experts who have more of an understanding of how to take advantage of all these different types of laws, and things change as you get bigger, and revenues change, and obviously tax brackets, and so there's a lot of it's a game. I think just kind of approaching it as a game, like okay, it's a game. All right, how can I win the game? Right? And so you got to like work with professionals to help you, where and sometimes it kind of feels weird because you're paying some money out, right? But you're getting these. It's almost like invisible gains, right? Because you're not having to pay the money out that you should have paid in taxes at that certain level, but because you had different strategies, you were able to not pay that money and keep it. Right? That allows you to do different things. So
it's no different than somebody that's athletic, that trains and has maybe was a personal trainer or something like that, and has a good idea of the human body, but is training for an event and they get injured. Okay. You can look at Google, you can think about it yourself, you can read some things, but really what's in your best interest? It's to go to a PT and pay a PT, even if it's privately, to give you their advice and guidance and treatment on what you should do to get back in track. And it's the same thing when you're really looking at leveraging professional services, whether it's 100,000 page tax code, or whether it's 7 to 10 years of education about the human body and movement analysis and kinesiology and pathophysiology and everything else, you're paying for that knowledge and how it applies to you. So with financial strategies, you're doing the same thing. Your gains are different than physically; they're obviously financially, but that's really what a business owner should do. They shouldn't try and figure that out. Trust me, we get enough of that too. Well, I read this. That's totally fine, but I mean that's like you and I doing an eval. And the person saying, yeah, I read on Google, that my supraspinatus is connected to my patellar tendon. And it's like, really? I mean, we've both not practiced for a while, but we know how ridiculous that sounds. So, we try and help that. We try and help that as much as we can.
That's great. I love that analogy. So let's talk about something that I know would be, that our audience would really love as practice owners, right? And that's like paying themselves. So as far as paying themselves, what's sort of the common ways, or the more, I would say like the right way, because there's probably a lot of different ways to do this, but salary versus taking a distribution, like what kind of ratios or kind of common things that you see there, and where some mistakes might happen too?
Yeah, that's a really good question, and it comes up a lot, and there's a lot of variance on answers. And the reason why is because like you said, there's not a straightforward answer. If there was, we probably wouldn't be talking about it. It would be 1 + 1 = 2, and nobody questions that. It just is what it is, right? But it's not. So the first thing it does is it varies depending on how well and how successful and healthy the practice is. What stage of business are you in? Is it startup? Is it maturity? Is it decline? So those things all sort of factor into this. The second thing is, what's the business structure? Is it a how is it filing? Is it an LLC? Is it an S-Corp? And the rules that are around that. But so it's very it's complicated and it's individualistic. So I can't give a global answer. But what I can do is tell you that there's guardrails there, and you've got to stay between them. And what those, figuratively speaking, what those guardrails are is you shouldn't pay yourself nothing, right? And just take everything out in an owner's draw. And you shouldn't overcompensate yourself, right? So at some degree of in the middle there's where that private practice owner ends up. And you've also got to consider, are there partners involved, and what's the compensation packages look like across the board for there? So there's not really one clear and concise answer, and there's never going to be. There never was, but you've got you've got it adjusts, and one answer for 2023 may be different than 2025, maybe different than 2027 for the same person because they're in a different position. But you've got to really respect as a practice owner the fact that if you're not following the rules of compensation, you should be, right? What I mean by that is, to some degree, you obviously are going to have to pay federal income tax and withholding, or you're going to get in trouble. So, but again, that kind of depends on what stage of the business is in as well. If it just opened and it's in 2 months in 2025, that's not a huge red flag. But if you're open for all of 2026, you've got to be respectful of those things. So, and then if you overpay yourself, well, maybe you're paying too much in employer and employee match taxes. Maybe you can dial that down a little bit. So our general advice is it needs to be a reasonable amount for somebody that's doing a job that's similar to you in this organization. So, I mean, if an average PT is making, I don't know anymore, $85,000, $90,000 a year, you probably should be around that number. Like if you're at 24 or you're at 240, you may be doing a little too much or a little too little.
Yeah. And I've heard those stories before, right? Where, whereas you've been in business for a while, your practice is making so much, and you're only paying yourself $25,000 a year, but you're taking another $150,000 in distributions.
Yeah.
Well, that's more of a red flag to the IRS.
Yeah.
So like you said, what would be a fair compensation to bring that home? The other thing, I mean, so there's the tax component to that, right? So you're trying to make sure that you're not overpaying in withholding tax, your Medicare and Social Security type taxes from that. But then I think the other part of it too is routine, and it's also psychological, and it comes back to as a business owner, you want to make sure that you pay yourself first, right? And I've seen practice owners that they pay themselves very little. There's the opportunity when times are tougher that they skip that distribution. Right?
Yeah.
And so then your take-home pay struggles, right? And you're like, I hate this job, I'm burned out, blah, 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 because you haven't paid yourself. You're not taking that normal salary like everybody else is. So I think making sure that you have that baked into your, normal payroll, what you should be getting paid for being the CEO of your business is important. You may pay a touch more in taxes, and that's fine, but you're still going to have a solid paycheck even when you may not be able to take a distribution. And I think it's a psychological and it's a routine thing. It's that profit first thing, making sure that you're taken care of as the owner of the business. Yeah,
it's funny. I mean, we can sit here and say, and hopefully nobody thinks this, but, this is the way to do it. That's the way to do it. You should do it this way. Okay. Well, let's talk about reality, right? So when I went into private practice, it was really difficult. We're learning a lot of things. You're drinking from a fire hose. It was crazy. And I remember a couple years into it, we were really struggling in our first acquisition. It was just a really hard transition. Things weren't going well. The revenue was down, and I was going without for a while. So, I was in that spot. And I looked at it at the end of the day, one time when I didn't pay myself, I looked at the payroll and I'm like, all these other people are doing well, meaning they're getting paychecks, which they should be on a biweekly basis. And I'm not even, making enough to pay my mortgage, right? And that's really kind of an eye-opening and humbling thing I'm sharing. But to your point, what I was doing in that situation was drastically overpaying staff, to the point where I was thinking, this is a business. I need this, I need this, I need this. And I didn't realize at the end of the day, I didn't need all that stuff, nor could I afford it. So in that, and we ended up actually out of that, letting go a few people because we were overhired. So, and bringing that back down to normal and saying, hey, look, I need to be, a clinical anchor first for the business at this stage until I get to the next stage. And then I can bring in another clinician and then start to work my way out. So we did, naively, we did that wrong in the beginning and realized it the hard way when it was like, well, why don't we have any money in the bank? Well, it's because we paid all these other people and they're living very comfortably. So yeah, it's tough. And I think a lot of clinic owners probably have gone through that at one stage or another. It's very difficult to see.
I've done that too.
Yeah, you just don't, and you don't really, weird thing is you don't really realize you're doing it while you're doing it until you're like, where did all my money go? Like, why did I get paid?
Yeah.
You're like, oh, wait a second. Yeah, we need to rethink this a little bit. So yeah, it's a tough spot. I mean, this type of advice is not, hey, between you and I mean, it's not we've done it perfectly the whole time. It's, hey, we've learned a lot over the years, but we certainly goofed some stuff up along the way too. I'll be the first to throw my hat in the ring on that one.
Mm-hmm. Yeah. And so, David here, given us a lot of great insight today. I'm curious if someone wants to connect with you that's a practice owner, what's the best way for them to learn more about the services that your company provides?
Oh, it's super easy. A good question, Neil. So it's Healthcare Accounting Solutions is the name of our company. That's the name of our website. Healthcare Accounting LLP. I think it's llp.com. And there's an About Us on there, and that's got my email, it's got my cell phone, and it's got a Calendly link, which is probably the most efficient way to grab me. Is just pick a time on there. It'll book directly on my calendar, and we'll talk. I do probably 5 to 10 of those talks a week with people, that are interested in learning more about us, or clients that are potential clients. And so just click on there and we'll get a 30-minute call set up. We'll do that. I'll do that with anybody that clicks on that link. So that's the easiest way. Or shoot me an email. But if you shoot me an email or call me, we're going to end up defining a time to talk anyway. So it just saves a couple steps.
Love it. Yeah, so that's healthcareaccountingllp.com. Check out David and his crew there. Fantastic group of people, very trustworthy, and I think provide an amazing solution to help you really take advantage of your finances in your practice. So definitely check them out.
Yeah.
And thanks to our audience here for listening to us on the podcast. Don't forget to subscribe to us here on the Practice Marketing Podcast, and check out our YouTube channel. We have tons of these recorded videos for you at I think it's physicaltherapymarketing.com there. But we also have it on our website now, which is awesome. So go to practicepromotions.net. You can get the Practice Marketing Podcast on there, as well as tons of free downloads and advice for you to move your marketing forward in your practice. So thanks to our listeners out there, and I'm wishing you much success in your business.
A free way for you to support our show is by leaving a 5-star rating and review on Apple Podcasts. It's a chance for you to tell us what you love about the show, and it helps others discover it as well. Just scroll down to Ratings and Review on your phone and click Write a Review. Thanks.